Yeah, so FP&A has changed somewhat. I think because we're able to utilize models better than we had, models have improved. If you look at ADP, the beauty of ADP from an investor perspective is that our business is incredibly predictable. So we know how many people we pay, we know how much is recurring. The one-time revenue we get for setup or projects is it's significant, but it's not gonna move the needle too much. Our models are very, very predictable. And so what we've done over time is we've centralized some of those models and the people who work on those models across some of our BUs to make sure that we can leave the BU CFOs, if you will, to focus on more of the project type understanding and the intricacies of the competition in the various segments we're in, et cetera, and really leverage the FP&A folks more in a almost more of a back office perspective. They're sitting in the back, they're liaising and communicating, if you will, with all of the BUs, but they're able to build much more elaborate and much more predictable models that have been very successful in making sure that we hit our forecasts and meet the expectations and the guidance that we've issued to the street. I will tell you, I started off by saying it's great when you're an investor in ADP because we're so predictable. It's terrible though because you're so predictable. There's an expectation that you don't miss by 1% or 2% because you just shouldn't. Very much unlike my life at Black & Decker, quite frankly. If there's a bread maker one year or a snake light or a dustbuster feature, the year comes and goes on a couple of new products. At ADP is just much more predictable, but certainly has a very much different expectation around predictability and the consistency of the numbers.